Let's get right back to our guest host this hour, Ron Barron, who is a legendary buy and hold investor. He's been talking with us this morning about Tesla a lot, but Ron, I want to run through some of your other stocks too. We just showed shares of HYATT as we were heading to a break. That's a stock you bought into when?
2008, 2009, and I had been an investor when I started my career in the 1970s. And Jay Pritzker, Tom's dad, who's the president chairman of the company, he was one of the first people to help me in business to sort of, get me started. So I have this very good feeling, and then he brought the company private. And then I'm friendly with Tom since 1979. 1979. I looked at the prospectus when they're going public, and it was $60 a share, $61. I'm sorry. It was amazing. He was 61 years old. And so what happened here is that Jay dies and his brother died in 1999, and the family is now feuding. There are 17 people who are on the Forbes 400 who are from Pritzker. 17 people out of the 400. And then, so he dies, and then the family begins to feud and to figure out how they're going to manage money instead of having Tommy manage money for them. They want the money. So Goldman Sachs partners up with the Walton family.
Mm-hmm. And let's look at a longer-term chart in the guys in the back, guys. This is a one-year chart, but let's look longer term because Ron's been an investor since 2009. And
so Goldman Sachs and Walton go ahead and they say to the investors, the other shareholders of the Pritzker family, we'll buy your stock. And it was $56 a share at the time. And they say, we'll pay 56 or 55, something like that. And it was private. They buy stock from them, and then with the intention, of course, going public at some point in time. And now the market crashes, and now it's 2008 or 2009. And now Goldman Sachs and Walton are sitting there with $55 stock, and more Pritzkers want to sell. They go public at $26 a share, half of the price that Goldman paid. And so they go public, and I invest, and we buy as much as we can, and we're one of the largest shareholders in the company. $25, $30 a share. Stock's now trading at 85 or 90, and it's a confusing investment for most people. So as a result of that, we sort of have it to ourselves. And so we keep buying. The company was 175 million shares when they went public. Mm-hmm. They're now 105 million shares. So the company's bought back 70 million shares, and they continue to buy back stock. They think the real estate's worth 120, 130, the stock's at 80. And basically, they're shrinking the capitalization. Tom Pritzker's holdings are now 20% and going up. And he's a guy, I love this guy. He's just the nicest, shake his hand, that's what he's going to do. And it's confusing to people because what they're doing is they're going to be capital light. So they own all these properties, and they're selling off a hotel, and they're selling it to investors, and then they're taking back a management fee. So they're taking a hotel, let's say, costs $100,000 a room, and might generate $10,000 a year in income, and they're selling off that room, getting $100,000 for it, and then they're taking back a management fee and they're making $5,000, but they got $100,000 in their hands. They don't have to have that invested anymore and maintain it. So all of a sudden, they go to this management fee, which is worth a higher multiple. And because you go from $10, $100 in revenues to $4 in revenues or $5, it's confusing to people, so they don't see the growth. I saw the growth.
Let's run through very quickly a couple other stocks. We've only got a couple minutes left in the hour. Google shares. Two of the Barron funds own Google shares as well. We did hear from the company last night, and this morning that stock's down about 3.5%. What's your take?
I haven't studied it. We own 480 stocks in our firm, and the top 40 stocks represent 54% assets. I don't own Google. It sounds like a great company. I love the commercial on the Super Bowl. It was one of the really touching, nice, heartwarming
It made me cry. Yes.
Yeah.
PENN National Gaming. That's a stock that you bought into in 2002. And as we've seen gaming stocks kind of rise and as sports gambling has come in, that's been something that's taken a pretty active move too.
Peter Carlino took over a family casino, a family racetrack that was for $25 million, bought it public. After 3 Mile Island blew up in the 1980s, we invested with him off and on since then, as recently as continued. But a $25 million investment, he ultimately sold the business for $7.5 billion. Then the deal for $25 million. Peter Carlino, I would follow him anywhere. And so then the deal didn't go through because the market crashed, and then it went down to $3 or $4 billion. We invested in the company then. It's now a number of different enterprises have come from that. They also have bought other casinos in which we've invested. And now what's going to happen is that they're going to benefit from the acquisition of a business called Barstool. That they've just bought for. Do you know about this?
I do know.
Yeah,
I never heard of this before. Everybody in my office knows Barstool. I didn't know what it was. And so they came in, they gave us a teach-in a couple of days ago. And this, not only are they going to make a lot of money on this investment for this $150 million and buy the rest of it out from the founder, but also it's going to increase the traffic in the casinos. It's going to be worth a ton. And this is another guy who's really a great guy.